Inflation debates are all the rage. Where do you come on this whole it's transitory thing?
I do believe that inflation is going to prove to be temporary, a temporary challenge that'll ultimately fade. And the reason I believe that is that nothing structural has changed. What ended up happening was a terrible economic outcome. There's a lot of pent-up demand that has formed. There's plenty of us sitting around waiting to re-engage with the service sector of the economy. There's a lot of fiscal support, but ultimately pent-up demand fades. Ultimately, the fiscal support becomes something of a drag as we move into next year. So there will be some inflation concerns. There may be some volatility along the way, but I don't think we need to change our structural views on inflation. There's still long-term forces against inflation.
How does that play into equities? I mean, there's all this debate about what does inflation mean for rates, and thus what do rates mean for stocks? Because you buy a fast-growing stock in low rates, they look good, but then it brings down the earnings multiples if they go up, blah, 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 blah. What do we invest in right now, given everything we know about everything?
Well, good growth and rising inflation should be good for the equity market. And so in that type of an environment, as you're moving from a recovery phase of a cycle into a more expansion phase of the cycle, you still want to own the more cyclical parts of the market. The reality is once you start to move into more expansion, that whole value growth debate dissipates a bit. Both generally do well in an expansion phase of the cycle. But you're right. If you're going to see rates move higher a bit here amid inflation, then it's everything that's been working. Cyclical, small caps, probably a weaker dollar, which means things like emerging markets and commodities. All of that does well in that phase of the cycle. I think what investors should realize, though, is this will all slow. And so while here through the end of the year, it may be volatile, I think that reflation trade continues to work. As you start to move into 2022, the economy is likely to slow and you'll see rates come off a bit again.
I feel like the market got tested this week and maybe came through it. I mean, I think just given some of the days that we've seen, if you went up to some random investor and said, how did the market do this week? They'd be like, oh, I got crushed. It was down big. The Russell 3000 is actually down 0.3%. It could end the week higher. The NASDAQ is up. It's hard to believe, right? It's like body blow, but the market's many parts are still up. Do you feel like the market has been tested a little bit this week, Brian? I know you're not a short-term guy, but you got to take these kind of blows to kind of keep investor optimism, I assume.
The market's definitely being tested, and it tends to be tested in year two of a cycle. And it's ironic because year one, the market pretty much goes straight up when the economy's not doing all that well because it's forecasting better growth. And then in year two, it's more volatile because everybody's worried that it's overheating and the Fed's going to raise rates. So this type of movement in stocks should be expected. Anytime you see volatility in markets or even drawdown in markets, it tends to be the result of policy uncertainty. And so it is being tested. We've digested some pretty, scary numbers if you read the headline on inflation. But again, there's things that are driving it, like base effects, like the pent-up demand, all of us getting back to flying and going into lodging outside of our homes. So the market gets tested by those things. I think the market is treating it appropriately. In my opinion, this is a market that is likely to continue to go up in a very improving economic backdrop and an environment where prices are rising a bit. That's a good backdrop for equities, nothing that we should be overly fearful of.
Shepard Smith here. Thanks for watching CNBC on YouTube.